Let me show you how to make your analysis on Bitcoin with spending absolutely nothing. Listen, guys, I think that there are a lot of you that maybe don't have or don't want to spend anything on these programs for analyzing your charts and making your plans. And I know that a lot of you are just starting out the prop firm industry or maybe even trading in of itself. And I would like to give you an alternative. I know that everybody shows extensive analysis and whatnot, and everybody shows you that it has to be really to the nitty-gritty and very hard to understand, and you have to pay I don't know how many $100 a month to have your analysis being done and your order flow and whatnot. And today I actually decided to come with an option for you to actually do it with $0. Okay, and I think this can help you a lot in understanding the fact that there is this concept of less is more, especially in trading. I don't think that having an indefinite amount of tools helps you in trading, or help you in trading, just because of the fact that the edge is at your own hands, right? The edge is yourself, and your analysis has to aid you in your decision making. There's nothing else that it has to do. There will never be a time where your one line on a chart or two lines being confluenced in a chart will magically give you an I don't know, winning trade that you will make a runner out of it and you will win an extensive amount of money, just because of the fact that the price and the chart moves based on various factors that at the moment that the chart is having the move, you are probably not really thinking of them. Maybe there's some guy that literally sells to the market billions of dollars and you cannot do anything about that, even if your 10,000 lines on the chart show a level as a strong support. First of all, I would like to show you that ever since I think it was January, I did not renew my TradingView account, and you can see it here by the fact that I still don't have any of these plans enabled. So for now, I have literally no plan. I'm paying literally zero for this TradingView analysis that I'm doing. And I think this analysis is more than needed in order to succeed. Obviously using only TradingView at this point. I will also show you the fact that I have tried yesterday to move from Excel charts to ATAS, and ATAS is actually free for crypto, right? You have to pay nothing in order to check the order flow on ATAS. But let's get on with the TradingView analysis, and let me show you what you can do with a $0 plan, so a free plan for TradingView. So I think you already got used to my my way of trading on checking 30 minutes candles, 4 hours, and so on. I would like to show you the fact that even with the free version of the TradingView system of analysis, you can actually do a lot. So in my opinion, the trading industry shows you that you have to have so much to trade and so on and so forth. And I think this is a very bad thing to do. I think you should learn how to use less and get more out of it. And I'm not saying it from a point of frugality. I'm only saying it from the point of you being able to be completely aware of the fact that the only edge in the market, of course, technical analysis works and helps, right? But it won't give you the ultimate edge. The ultimate edge is yourself. Okay, so by this, all I wanted to tell you is the fact that on a free TradingView plan for now, I'm using, for example, pivots, right? Let's just take pivots, for example. I'm using pivots on knowing where the CME gap is, for example, or where the pivotal lows are. The 74.5K pivotal low is at, marked with a purple line, for example, so I know if we actually perform a failed auction and start going higher. Then I am using, as you already know from my compounding trader series, I am using a weekend price action and overnight range, overnight overnight price action range. Let's just call them, I don't know, I'm just bracketing them with different colors just to understand the fact that these moments in time I'm not trading. I'm either asleep or I should not be trading, just because of the fact that my edge is around the probably New York session, or having to take some liquidity out of the overnight high or overnight low, or seeing how the weekend price action is developing. Okay, so I'll give you a simple example, right? Let's check last weekend. We can see last weekend that we had a high on Saturday, and then we had a high on Sunday here that actually moved up to the value area high of the current range. And I actually took this short and I took it to 67k. So this is very simple. Okay, I knew that, for example, at that point the weekend price action was here. We took the weekend price action high for the Saturday for the Saturday price action, and I just decided that if we will go for the value area high of the range, stop losses would be very good compared to the weekend price action high of last week, and to the fact that we still probably have some time to waver around for the for the 74k range to be hit. So for the 74k area to be hit, and so I just took the short, right? At this point, yesterday I was in the position of having a short from 70.8k or something around that line. And so at that point, when we had the big pump yesterday, I decided that the weekend price action high is actually a good stop loss point, and I can just keep compounding on my short, which I actually did 2 times. And yeah, it's just that simple, right? Just keep it as a stop loss range or stop loss area over 71k. You have actually the former price action range as well from last week, around 72.5k, and so then you just create a plan based on that, and based on the fact that this price action is actually working properly with setting with just setting trades after the week of the weekend price action. So for example, this week I can think about this weekend price action as a liquidity zone. So for example, if I take a long, I might be thinking of the fact that we might go higher than this, maybe even with power. And so at this point, it is very simple to understand the fact that these ranges for me are very important and they're free. It's very easy to draw some rectangles here. Okay, so we had the pivots, we had the ranges for me, which are pretty important, and then what is the most important fact of this is that you still have fixed range volume profile. Okay, so for free trading view plan, you still can use the fixed range volume profile. What is the fixed range volume profile? So for example, for me these weeks it was very important to understand where the volume lies at from the current low that was created on the 6th of February up to the current price action level. Okay, so this is how I understood that I can take this short from the weekend price action high created on Sunday morning, that went on to the value area high of the current range. That's how I knew that it is probably a good idea that this rotation to 67k is enough for my trade and that I can take my profit there. This is how I know that if we actually move from this value area here and start moving back into the higher prices, I know that there is a big range up on us. And so at this point, if we actually move higher, I know that I have a value area low here. I know that this value area low is actually kind of the same as the CME gap here. So at this point, the first idea that I have is we could probably just refuse going in this value area. We could reject this value area low and the CME gap, fill the CME gap, reject the value area low, and go back down maybe to 50s, or who knows, maybe if we actually even go to 80s. So this is how you can literally make good plans based on volume or fixed range volume profile. and simple analysis. This is what you have to do. The most important thing in trading is risk management, not really having 10,000 lines on a chart or having 5 confluences lining up at the same time. I actually also use Fibonacci from time to time, as you can see it here. I think that for the past few months and maybe a year, the best range to use Fibonacci in is 0.7 to 0.75. You can see it here that it actually lines up with one of my parallel channels, which I also use but not that often. So for example, if we would go into 0.7, 0.75, I would probably look for a long, just because of the fact that we are literally having a good stop loss at 60k. If you literally make it to the top of the range that you used your Fibonacci from, you're making a, some people would say 3R. Depends, because if you're actually compounding your trade aggressively or compounding your trade properly, you'll get way more than 3R. But yeah, that's the point. Basically, Fibonacci is just a tool that shows you how much you are retracing in a move, and that's it. It's nothing special around it. So yeah, there is also the parallel channel that I'm using. I'm not using it actively that much, but it's fine from time to time. So for example, if you're looking at this chart, I just used it on the 2 weekend price action highs. I got a pivot point at the low that we actually started moving up from, and in case we actually go lower, I can think of it as, okay, we are having a drawdown channel here. Maybe we will start moving up from here. Maybe we will take the liquidity from upside of the channel and so on. Maybe if we move up from the channel and retest it, we can actually go higher, or if we go down from the channel and retest it or back test it, we can actually go lower. This is something that you can use. It's not necessarily that important, but it's good from time to time when you actually have the market context to use it on. I would actually want to show you ATAS now. So this is basically an alternative to XOCharts, and I tried to use the free version of ATAS. I am now trying to see how much different Plus membership is. So the only thing I actually did is adding the bid ask indicator here. Basically what you need on ATAS is 3 things in my opinion. So the difference between free membership and the Plus is that on Plus you have 6 indicators, and then on free you have 3 indicators. The 3 that I will show you right here are enough. So open interest, cumulative volume delta, and the actual footprint chart. So let's see how we will find them. You have cluster statistics for the ones on the bottom. So this is the footprint charts. Here I'm using delta, I'm using volume and trades. Why is this important? Basically delta is the difference between longs and shorts in a candle. The volume is obviously just the volume, and the number of trades is important because usually when you have a lot of trades in one of the candles, you're expecting probably kind of a lot of trades in the next ones as well. So for example, this one here, you had 6k, then you had a few thousand as well. So 3, 2, then you had 10k at New York Open. I think this was, obviously it's not 100% the case all the time, but so if you see here 4k, 2k, 4k, 5k almost, and so on. And also it's important because sometimes you have a lot of delta and volume, but you don't really have many trades. So let's just get onto this. You have cumulative volume delta, so this is basically CVD. This is how I'm checking the divergences. I'm only checking divergences on delta because this is, in my opinion, the most important thing in a chart. I don't care about RSI divergences and stuff like that. That's stupid. Everybody uses that. People probably don't know how to use divergences properly, and if they're also using it on a lagging indicator, they're already doing a disservice to themselves. Then you have open interest, which shows you what types of orders are actually going into the market. Are we actually going with orders into the market, or are we actually closing positions into the market? If you're closing, you're actually going down with the open interest. If you're opening, you're actually going higher with the open interest. The bid and ask is important for me to not look into the candle, right? So if you can see here, you are going with higher open interest, increasing open interest, and you are going with a negative bid ask, which means that if you're checking the candle, you will see that there are a lot of million of shorts here going into the market. So at this point, I would like to show you how I would use free membership on Atas to actually get some goods out of the market, right? Because this is what we're here for. Actually, let's go to this one that happened over the night, which obviously I didn't trade because it's overnight. You can see here that you have open interest going higher. You have 21 million delta, positive delta, and only 1.7k trades. This will probably tell you the fact that at this point you are going to reverse this candle just because of the fact that we are in a low volume session. We are in a low volume context where you're actually having longs going into the market but not many trades, and you are actually forming a bearish divergence. Why am I saying it's a bearish divergence? Because if you can check the CVD here, it's actually going way higher than the one before. So here you can see at 70k you actually moved on some trades closing. If you can see the open interest going lower, it means that some shorts got squeezed, so we can go higher. And now we are moving way higher on the CVD line, but we are actually lower on the current price, which means that we are creating a bearish divergence here. We are having a lot of aggressive longs going into the market, so we are expecting here that if you're going to take a short trade, you might even have some profits on your table. You can see it here. If you're going into the candle, you see 6 million longs, 6 million longs, 2 million, 2 million, 2 million longs. So there are longs going to the market at a time zone when there is not much trading going on. This would have been a pretty good short with maybe even stop loss above this high, or over the weekend price action high around 71k that we discussed about earlier on TradingView. So this would have been good. What I noticed yesterday and the trade that I actually took yesterday is this. I didn't really take the trade. I noticed it and I expected the price to go higher so I can reshort, okay, so I can compound my trade. So as I said, I had a short around 70.8k. I saw this in the morning where we had a lot of shorts actually going into this low, okay. So you can see here that you have a minus 20 million delta. You have 1.4k trades, which is pretty low, and it's pretty bad here. And so at this point you're at the lows. You are creating bullish CVD divergences, as you can see here, right? So you are not breaking this low, but CVD is going way lower. You are having shorts going into the market. You can see on bid ask on open interest, but I can actually even show you here. So shorts going to the market, obviously not a lot of shorts, but pretty good amount of shorts. So at this point, you can say two things. You're either in a short from higher and you're waiting for the price to go higher in order to compound on it, which actually happened, and I did this. It actually went higher on shorts being squeezed, as you can see here, just because of the fact that we have open interest going lower. And if you are also checking this, you can see that there is open interest going higher at the top of this range, which tells me that there are two things happening. It's either both shorts and longs opening at the top of this range, and you can see it here, 2 million at the top, 1 million, and you have some shorts at the same time. So at this point, this is a really good compound for your short. Or you could have alternatively thought about the fact that you are having all the things here lined up just for you to take the long trade, maybe to a bit higher, maybe not breaking the weekend price action high, but maybe you could have taken a scalp, which I wouldn't have done it. But I waited for price to go up so I can compound my short. So at this point I had this short, I compounded here and compounded it once more once we went lower from this current low here that created the bullish divergence. And I closed it at 67k, which we already talked about. And so this is how you can use Atas in order to increase your win rate or increase your consistency, just because just with the fact that you know what you're doing and you're literally wasting $0 on this free membership. It doesn't take anything out of you other than actually going to the market and studying it and just putting in effort. Okay, you don't need to put $200 a month getting all the memberships in the world and drawing 10,000 lines on the chart. This will not make you a profitable trader. This will only basically move the money from your pocket to the people that want you to buy their services, while there is, for example, an alternative with $0 where you can make a lot of either profits or improvements in your trading. The current situation right now is that we're having increased open interest, and we have some lows, some shorts opening in this area. You can see 1 million. It's not much, honestly. It's number of trades is bad. Delta is pretty low, but you are having shorts opening here. It's probably a bullish divergence compared to here. So yeah, it's a bullish divergence, barely a bullish divergence, not really. So there's probably, in my opinion, no trade here. Better to wait for the New York session of Tuesday, because yesterday it was a bank holiday for New York, for America. So this is how you can use both TradingView and Atas using literally $0 in order to enhance your analysis and in order to get better at trading and create a consistent system. If I want you to take anything out of this video, is the fact that less is more, okay? Especially in trading, focus on your mental game, focus on resetting after a trade, but keep your analysis, I don't want to say at a very low tier, but I think keeping your analysis smooth and simple will yield more in time, and your mental capacity will be greatly increased by this. You can focus on risk management, trading, just managing your trades, rather than checking every 5-line confluence on your chart and taking your decisions like that.